All right, in this portion of the module, we're going to be taking a deeper dive into understanding Fibonacci. Now that we sort of understand which levels we need to be paying attention to, I want to break down how exactly Fibonacci works so that you understand it on a fundamental level, so that when you're applying it to your trading and you're seeing things happen in the markets, you're going to understand how it works, why it's working, and sort of a deeper understanding to allow you to get an edge on your competition with Fibonacci. All right, so now that we know what each value on the Fibonacci stands for and how it's important in our trading, I think it's important to understand where these values are being derived from and why it's actually important to understand. So to sort of dive deeper into the Fibonacci sequence, we need to look at where it actually came from and why we're getting these sort of numbers in the indicator on the chart in these specific levels based on the actual formula that's being derived from the Fibonacci ratio. So the way we start to look at Fibonacci and quantify why we're actually being able to derive these values is by looking at this Fibonacci sequence right here starting at 0. So basically it's a series that develops when 1 is created, and basically as it progresses through the sequence, it's basically adding up the values before it and then continuing on in that same pattern. So we have 0, something is created, giving us a value of 1. Then we have another 1 created. Once that second 1 is created, now we're taking the sum of both of these values right here, and it's giving us the next sequential value. And then the same thing moving into the future. These two values added together will give us the next value. These two values added together will give us the next value, and so on until infinity. So basically each new value is the sum of the preceding number. So before we continue to dive into that sequence, I want to show an example of how Fibonacci works in nature to make it sort of more easy to understand why we're seeing this ratio. No one exactly knows why we're seeing this ratio. Maybe it's just us sort of cracking the code of human creation, if that's actually a thing. But basically Fibonacci is found all over nature, and we need to start to understand how that is happening so we can relate that to the financial markets. Okay, so right here we have a plant, right? So very basic explanation of Fibonacci. Okay, we see Fibonacci in everything in nature, okay, including when branches on stems or trees or anything starts branching off and multiplying, we're basically seeing Fibonacci sequence in this as well. So we start off with 1 root right here. This is our 1 value. Okay, once we have another branch created right here, we also have a 1 value. This is now spread into 2 values, giving us this 2 value. Now that we have 2 branches right here, we have another branch being built here and here. So now after this point, we have 3 new branches, which is giving us this number right here. And this will proceed all the way until this comes out to having tons of branches, and this number will go into infinity until, you know, the plant either dies or it'll just basically keep going. So this is sort of a very basic understanding of how Fibonacci works, but you can start to sort of tie that back into the financial markets and look at these movements as basically financial decisions that people are making, right? So if one person buys here, then we have now another branch being created right here. So now we have 2 people taking action off of this buy right here. And so if this is a trend, right, now we're seeing this sequential order in a trend by market participation, and this is sort of how we start to quantify why things are happening and why we can quantify it using the Fibonacci ratio. Like I said, we don't really know why that is possible in the financial markets, but basically what my interpretation is it based off of certain moves and decisions that people make, other people will then make decisions. And basically, once we look at human behavior as a collective whole, we can start to understand that people will repeat the same behaviors to a certain point where all of a sudden that behavior is going to switch and has to come to a reversion in a mean, and we can use the Fibonacci sequence to basically predict where that change will happen and where the price will move based on that decision. Okay, so let's go back to this Fibonacci sequence right here. So like we said, each value is the sum of the preceding value. You'll probably see if we go back to the other slide, we have this 23.6 value right here. Okay, so this is the first retracement level off of a trend retracement with the Fibonacci number. And the way we arrive at the 23.6 level is basically it's the value of the dividing three numbers to the left of the current number. Okay, so if we have 34 as our current number, we go 1, 2, 3, and then we divide 34 by 8, and it's going to give us 23.6 approximately. So same thing with the 38.2 level. This is the level just under the 23.6 level that we use to quantify trading levels where we make certain decisions. This level is found by dividing the number 2 spots to the left of this value. And then if we go to the 61.8 level, this is found by dividing the current number by the previous number, and this will be the full retracement value. So basically any number in this sequence, if you are to divide it by the previous number, that is going to give you 61.8, and that's sort of how we can determine where a full retracement on a trend is going to happen. So this is sort of hard to understand, but what you want to basically try to look at this as is the further back that you go in the sequence, the larger the number is going to be once you divide the values. So basically, if you have a collective behavior and certain people are making certain decisions back in the sequence, the further back in the sequence you go, the less amount of participation you're going to have, which is going to result in the price action movement. But if we have a ton of participation change on basically all of the behaviors previously to the current behavior, it's going to result in a full retracement, which is the 61.8 value that we always use for profit targets, and as the full Fibonacci golden ratio value. So obviously the closer we get to dividing values close to each other in the sequence, it's going to give us a smaller number, and that is going to be the reversion down to the overall move, and that's how we start to quantify Fibonacci levels. And like we said, this can't be calculated exactly, but it can get you relatively close enough to the point where it's negligible and you can use it as trading signals. Okay, and once we dive into Elliott wave theory a little bit more, we're actually going to be using the 161.8 value and the 61.8 value to be able to project tops of trends on a 5-wave pattern, so we can basically see where price levels are going to make significant changes and where those levels are predicted to be, so we can quantify turnaround points and retracement points as well. So Fibonacci ties into the Elliott wave theory a ton. These sort of go hand in hand, but once we go into Elliott wave theory and you have the background of Fibonacci, it's going to be a lot more clear to you. As you can see right here, we can use the 161.8 value to establish tops of trends. And I think that that's extremely cool with understanding Fibonacci. All right, so now I just want to show multiple ways that we're going to use Fibonacci tools on charts. And you're going to learn a lot more about this when you're learning the trading system itself, but I want to go over some rough ways that we can start to understand how to use the Fibonacci tool, okay? Because it's one thing to have it shown on a chart, and it's another thing to actually try to implement it into real life. So I want to go to, okay, this is a perfect example of when the 61.8 level gives us a perfect buying opportunity and shows us where things are likely to turn around. Okay, so basically right here we have, I'm going to take all the drawings off for a second. Right here we have a surge in market participation where the price has drastically increased and broke over a range. So if we look right here, this is sort of the area where this trend has started, and this turns out to be the peak. Once we start to see the price action pull down a little bit, this is clearly the peak. So basically what we should be expecting on a human psychology level is the price action to be able to, if it's going to revert down to the overall trend, pull down to the 61.8 level. So we can actually draw a Fibonacci tool from swing low to swing high here, and we can look at all of our ratios to see if the price action has basically reacted off of these levels. And you can see right here, we actually alerted this in the Discord as a long-term buy, but the price action comes exactly down to the 61.8 level and then continues moving higher. So you can start to see how this is a very, very important tool to use when we're looking at price action. But I also want you guys to understand that you should be using this tool creatively. There's no really right or wrong way to use this, as long as you're looking at where you're starting to see reaction points on the price action. Okay, you can basically draw a Fibonacci tool on most trends, and if you start to see, like, see how we see a reaction point off of here, and we start to see a reaction point point on the price action against this line, and then we start to see support on this level as well. What you want to start doing is looking for areas where the price action is reacting off of the Fibonacci, because what that's going to do is it's going to indicate that moving into the future, those levels are going to be substantial levels that you can then use to quantify values for future trading levels. And once you understand what these values mean, like the 61.8 level is a full retracement value, the 50 level is a continuation value, and then the 0.382 level is a slightly higher continuation level, and the 23.6 level is the first level off of the high. You can start to understand, if you see correlations in Fibonacci, where the price action is going to move, and use that for trading. Okay, we're also going to use this to establish profit targets when we're longing trades, but we'll actually go over that when I teach the InnovaTrade trading system in the next module. But I just wanted to let you guys know that you can use Fibonacci in any way. It's not only a tool to be able to calculate profit targets, but it's also a tool to basically draw on any trend to see if your trading thesis makes sense. Okay, a lot of times what I'll do is, if I'm taking a trade, even though I'm not using the Fibonacci for profit target reasons, I'll draw it on an overall trend and look at where the levels are reacting so I can make smarter trading decisions and have an understanding of where the price action is on a psychological level in the market. And now I want to go over a Fibonacci projection tool. And basically what this is this is allowing us to utilize the 161.8 level on the Fibonacci. Basically, it's a multiple of Fibonacci. So instead of having retracement levels, we're actually using these same values to project higher levels where it's going to be multiples of the value. And basically what we can do is we can use this tool off of specific price levels that we're actually going to go over when we go over Elliott wave theory in the next module. But what we want to do is we can use this level to a high, and then draw this level back down to either our entry or another high on the trend right here. And what we can do is we can use this to establish important levels and multiples of trends. So you can see right here we have the 161.8 level. This could potentially be the level for the fifth wave pattern if swap USD continues to move higher. So this is a very reasonable level for price projections that we'll learn about a little bit later. But basically this is allowing us to use 161.8 levels and then the 261.8 levels and so on up the multiple chain. But basically from this leg to this leg, and then wherever you drop this is going to be your one value. So that's going to be the full retracement value. And then anything past that point is going to be a multiple of the value where you have the difference between this level, and this level. And like I said, if this is confusing, when we go over Elliott wave theory, this is going to start making a lot more sense. Just as another example of Fibonacci levels right here, see how we did an inverted retracement tool off of this level down to this level? And we can basically see all levels in here where the price is bouncing off of these Fibonacci levels, which is indicating to us that in the future, these price levels will continue to hold true. And you can see right here off of this level, we had a reversal off of the 50 level, and this is a downtrend right here. So the 50 level was a continuation, and now we see the continuation of the price action. So basically, this is a way of quantifying levels where the price is going to react off, and it's very, very useful in the trading space.